Ed Hyman, what are you writing with your black pen this morning in the acclaimed note? What is the Hyman distinction this election day?
So the biggest problem is not the election, Tom, it's the virus. And as you know, it's going rampant in Europe. It's up about 100% on cases here. And that's the big risk. The market obviously is focused on the election. And in that regard, it's done. Investors have parsed every single aspect. They parsed what if Trump holds on, that's okay. What if Biden comes in? Well, that's a nice change. And the tax increases will come later and the fiscal stimulus will come sooner. And so that's okay. And if there's a contested election, we've gone through that too. And so investors have gone through every scenario and they've decided that the contested is the least favorable, and between Trump and Biden, both would be okay. And so the market was up yesterday and it's up today, waiting for any outcome that might show up.
Ed Hyman, the charm of your work, back to C.J. Lawrence, and again, I mentioned Alan Greenspan, I think the two of you are on the same page, which is granular analysis. In the microanalysis you do of truck miles, railroad miles, and the rest, what do you see right now of the American experience?
The first thing that comes to mind is that the retailers, the consumer, are still doing well. Looking back, consumer spending in September increased a very strong 1.2% month to month. We survey retailers every week. And last week, they had a very good week. And it's been good for a number of weeks. So the consumer is still in there. And that's the first thing I noticed on that question. The second thing I noticed is what you're not even thinking about. China is leading. They went in first, they came out first, and their economy is still doing quite well. We survey 21 companies that do business in China, and that's increased a lot. And so whether I look, granular here or granular there, the economic backdrop right now is good. What worries me is we're going into colder weather, and the virus is going to pick up, and I'm worried that we'll get shutdowns, and that could put a air pocket in the economy until we get the fiscal stimulus that Francine, you were talking about, which we do need.
Yeah, we were talking about that, Ed Hyman. What I was also going to ask you is actually, if we have a Democratic president, Joe Biden, in the White House, with a Democratic Senate, does it change the dynamics in how we deal with this COVID-19? So does it, go back to lockdowns? Does it go back to listening more to what the scientists are saying?
I'm not sure on that, Francine. I mentioned the things that investors have straightened out on. This one is up in the air. And so if you get a Biden victory and the cases go up, there's probably a bigger chance that you have more restrictions or lockdowns that could, put a negative tilt on the economy. I've been optimistic on the economy for the fourth quarter because I did not expect the viruses to pick up so much. Didn't expect it to pick up so much in Europe, but they have. And so I've cut my forecast from 10% for the fourth quarter, following 32%, down to 4%. So I'm leaning toward that. But I think your point is right that the market knows that if a Biden victory, there's a little more chance of restrictions. I wouldn't say shutdowns, but I'd say more restrictions than if Trump is there.
Ed, you also mentioned China, the fact that, they overcame the virus quicker, that they're back on track in terms of growth projections. How much do you worry about the relationship between the U.S. and China actually not changing, after a Biden presidency if he gets elected, so that it'll be different in form but not in substance?
Francine, I've pretty much given up. I thought that China and the U.S. would be coming together, say 5 years ago. And now it's pretty clear that the optimistic case is we just move in parallel tracks. We don't reinforce one another positively, and we just keep on moving, but not moving, in a synergistic fashion. But we're forecasting 8.5% growth for China in 2021. Wow. which is enough. It's big, and so that's enough to independently lift the economy. My general feeling is that we are spending so much time on the election, and there's so many big issues out there, some of them very negative, like the vaccine, like the virus, and I think the vaccine would be a positive, and then some of them positive, like China doing better. And I will say that one of my strongest views is that the amount of stimulus in the system, aside from fiscal, monetary stimulus is just ginormous and global. Balance sheets, money growth, interest rates, I think is being vastly underestimated as a lift for the economy. And so days when the market goes up like today or yesterday, I think about what you mentioned, Tom, don't fight the Fed, or don't fight the ECB.
Ed, I think so important. And a final question on this election day, if we could. You and I know the giants that have fallen too early. Of course, Paul Tsongas, the late Pete Peterson, and we lost Martin Feldstein before this election. The fact is the three of them would be appalled by this debt. They'd be appalled by this deficit. How did we work our way out of this within this political system?
So, when the facts change, I change. Sir Maynard Keynes, and MMT has the upper hand right now. Tom, the rates are still low, even though they're knocking on 90 basis points. Inflation is not there. We have the ability and we have the need to spend the money. So I would be in favor of more fiscal stimulus. And God bless Marty Feldstein.